Hey, good day, everybody. This is Dennis Wilborn, the Active Trend Trader. Welcome to On the Radar, our live market update for the, what is it? It is the 8th of April. Wow, how time flies when you're having fun. The market is really doing some really great stuff. Let's get over and just jump into the session as people are joining us online. We also are, we are live and working out. So what are we looking at? Just want to say aloha, everybody. Your week is going well so far, this first week in April 2021. I'm going to be talking about a couple of things today. One, we're going to be taking a look at the three indexes, the S&P, the NASDAQ, and the Russell. In addition, we want to talk about a little bit about what the heck is the Rule of 72. You may have taken an economics class back in the day, and you may have said, hey, I kind of know about that, kind of. But we're going to basically be chatting a little bit about the Rule of 72. And if you are joining us online, I want to say, again, thank you very much for joining us. And fade this guy out, and then we'll jump in and specifically about the indexes. So what do we have going on here with the S&P? We have the S&P driving up, continuing to push towards higher highs. They're higher high today as we get our price action moving up. As you see, I drew in yesterday and I left that in place. Let me sit here and see one. I want to see one thing. And yeah, right now it's not showing us that we are live on, yeah. Okay, no problem. It'll show up just a little bit. Sometimes it's a little bit slow to react because I have to take off the, there we go. So if you're joining us, welcome aboard. There we go. Okay, so let's get back into the S&P, the SPY. What's it showing to us? Yesterday, I drew a Fibonacci extension. Now, I love working on Fibonacci extension. If you never need to know anything about Fibonacci extension, you go over to my YouTube channel, Market Tech Talk, and you will find basically two really good videos there about Fibonacci extensions, both from a time and value aspect, the dollars. A lot of people don't know that Fibonacci's can be also utilized to establish parameters for time. And so I think you might find that training interesting. If it is something you would like over there, hey, just go ahead and leave us a note and saying, hey, this is good training. And maybe just tell us what else you would like to see us do some training on. As you can see, we're pushing up towards the 100% extension, which would make it a symmetric move with that last leg up on a daily basis. We did a nice little pullback to about the, a little bit past the 50% pullback, and then we launched up. We are almost reaching up and hitting those new highs. We do not have a reversal signal in place. And as I was talking yesterday, I said let's see, that would have been Tuesday, we had a bearish harami show up, which means this body of the candle on that day there was inside the previous body's candlestick. And we are basically getting a push up higher than that. So that has voided that bearish signal. TSI pushing up to the upside, up into higher highs. Very bullish for the market. And so there's nothing to do with the S&P until we get one of two things going on. We get either we hit this hot upper resistance level that is drawn in by the Fibonacci's, and we get a reversal candlestick, and TSI crossing back down, and then we'll get some of a pullback. But that's what we'll always be looking for, is a pullback towards either the 8 or the 20-day moving average, which by the time it starts to pull back, it will probably be up in this area here, because you can see that's accelerating up to the upside also. Those are all both very good signs of what? A strong bullish move. So S&P, nothing to do right now. What about the Qs? Qs were looking a little bit weaker, early on, but they finally got a breakout. Look, they've gone up 1, 2, 3, 4, 5, 6. 5 out of the last 6 days, they've actually gone up. Also, voided the bearish reversal signal, which was a bearish harami, along with a shooting star candlestick, which was voided with the breakout today. This is a nice, really nice breakout. And I want to show you one thing. We'll pop over here to the intraday. Keep an eye on these past highs. As a matter of fact, we can draw in it's a good idea to draw in a trend line, and it is a trend line. It's a horizontal trend line. But just draw in one of those at these past highs. And then go back to the daily. And as you can see, that daily is just about out there. I'm going to basically just right click on this real quick. And I'm going to activate it. Pull it up to that level right there. There we go. So that should be in there pretty darn close. And the actual high. So that's where we'd anticipate price action getting to. You want to put in an alert right there. Just say, as I get closer to that, and I put in an alert about the 337 level, and it's only a couple of dollars away. And that way you would get an email to say, or you get some kind of a text message that would say, hey, you've reached this level on the Qs. And all that means, it doesn't mean to go and trade it. What it means is go take a look at the chart to see if we're getting set up for a potential pullback. Similar to the S&P, the pullback we would anticipate it to drop all the way back down into the 8 and or the 20-day moving average. But keep in mind, where is the 20-day moving average going to be, let's say, 2 days from now? Well, if it keeps going with the same trajectory, it's going to be up there. So then you just click across here, and tomorrow, which is Friday, right, it will go up significantly and be about price out about the 322 level, and then it's pushing up from there. And so, hey, Bomi, how are you doing? You're up off early over there, South Korea. That's daughter-in-law. It could be my son also. So that's what we're looking for. Nothing to do yet. I mean, we do not have a buy signal. There was a really great, this was an opportunity about a little bit over a week ago on this move up here, but everybody was concerned that would have been a great buy breaking out of this support area, or correction, this resistance area by the downtrend line. And if you jumped on there, I know some of our members of Active Trend Trading jumped on and actually bought the leverage ETF. And they, basically have ridden it up. How much did it run up? Here's what's really surprising, which is going to tie back into part of what we're going to be talking about, as our tip for today, is when it broke out here, basically the same, it's in here. This is the Qs. This is the TQQ, which is the leverage ETF. And it's 3-time leveraged. So come down here and draw that, that basically that trend line which is about there. And so stay in place. There we go. So it broke out here about the $89 level, and then has run over the last few days, has run up to about that point there. So about an 18% run in a very short period of time. That's one thing you can count on with the leveraged ETFs, is that if you catch them at the right point and right time, which we attempt to do with our active trend trading system, you can get a very rapid move up uh, um, uh, you know, to the upside, and then it can keep going from there because it's going to move. To just be aware, the leverage ETFs, they move 3 times the daily amount that the underlying, which is the NASDAQ or the Qs, they move 3 times the daily move of that. So that's what we can be looking forward to. So that's why I like to trade them also, but I don't stay in them very long. I typically, due to some of the other weaknesses of them, I'll not want to stay around or in them for more than 6 weeks to 12 weeks, and I'll get out and reposition. IWM. Okay, I'm liking this, guys. IWM, we've got the downtrending line, but what do we have? We have a bullish reversal signal. So I will be looking at, for our premium members, putting out an order if we basically retest down into the wick of the day's candlestick, which is, this is a double. This is a twofer, if you will. I have a hammer at the end of a downtrend. That's one bullish reversal signal. 2, I have the small body inside the larger body. That is a bullish harami. That's the second bullish indicator. Breaking above the 8 and 20-day moving average. That again is a third. Now it only has a short way to go to get to the downtrending line. But again, this is an excellent reversal signal. And if that is in fact the low of this current, if this is an important low off the 50-day moving average there, that will make it a second higher low. Take out that higher high right there, and that'll make a second higher high. It will be, by definition, technical definition, back into a uptrend, a more specific uptrend on the IWM. Hi, Elsie, how are you? Glad you're here with us today. So that is looking pretty good. If you are as I said, if you are a premium member, be standing by. Expect an alert to come to you a little bit later today. So the other thing I just want to remind you about is that, one, if you are watching this on Instagram, I am loading the recording of this session only on YouTube now, simply because the Instagram TV was not a really good platform to air the actual full videos. And so I think you'll enjoy watching them over on YouTube. If you're not a member of, subscribe to us on YouTube, it is Market Tech Talk. Market Tech Talk. So real quick, before I jump into a couple of stocks I want to take a look at, is I mentioned about the rule of 72. The rule of 72, I think I first heard about this as I was taking engineering economics class back at the University of Texas back in the past century, because it was back in the it was back about 1978 or so. And the rule of 72 is basically it's basically saying that if, how long did it take, or what's the percentage it takes to compound and double your money. And it was 7.2%. If it was compounded for 10 consecutive compounding periods, you would double your money. Now, back then, what they were looking at was basically saying, okay, if you can do 7% per year, you can double your money in how many years? 10 years. Well, one of the things that we're introducing with active trend trading in the aspect of wealth building is this concept of accelerated compounding. Accelerated compounding, what does that mean? It basically is talking specifically about instead of getting 7.2% per year, we're looking at how can we bring that down to do it on a monthly basis. And how much do we have to generate as a return on a monthly basis in order to double our money in a year. In other words, get a 100% return. Now, if you're an active trend trader, what you're looking at is it is almost exactly 6% per month. And that's what we target. We're targeting somewhere between 5 to 8% per month with active trend trading. If you do want to know more about that, please just DM me. We can start a conversation about what we're doing with active trend trading. Last year we did hit 70%, and many of our members actually beat me, the active trend trader. And I'm really happy when and pleased when our members beat us. Had one gentleman, more than he had over 100% return for the year, and several others had 70, 80, and more, return. That's not a promise that's going to happen every year, but if you're in a system that is, a tested and proven mechanical trading system, it helps eliminate and helps us control emotions and gets us ready to do trades. And that's one of the things I like to do is I send out my trades so that our members know where I'm trading, so they'll know that, okay, tomorrow I'm looking at getting a long position on IWM. If I take a long positions there, where am I going to stop out at? Well, if it drops below the low of today, that would be a good place to put your stop. So, okay, let's jump over and look at a couple of stocks, and a couple of them that we were watching. One is was looking pretty good earlier today, and this is an ETF on the biotechs. It was looking pretty good earlier today. I'm not sure it has finished up, but what it's put in is it has put in what's called a bullish harami, small body, and also it's an inside day. Oftentimes that leads to an upside break and a move higher. If I were to try to get into a trade on this, I want some confirmation on this. And so one of the things I can do is just take confirmation, a break above the high of the low day, which would be about 135.75. Or if I fail and it drops back down to the 200-day moving average, I would almost like to have that happen, as much. So in reality, I'm going to put an alert down here about 130. And if it bounces down there, I'll be looking at a potential trade on XBI. Bounces down there and reverses, because what would we have? That would be retesting a past low and showing a positive divergence. So that's one. The other one is go on here. Ooh. Yeah. Boeing. Again, Boeing showing a really excellent, what is this? This is a bull flag. Bull flag is basically a nice series controlled pullback to the 20-day moving average. So if we take out the high of the low day again tomorrow, or we retest down around the, down in the wick, that would be an excellent opportunity to jump on a trade to the upside. We again, this is a what's called a piercing line. It's covered up over half of the previous day's body, and so that's a bullish reversal candlestick also. Next, we're actually in a trade on Schwab, but Schwab was also giving us a really nice, what is that? A bull flag pullback into the moving averages. So we can start planning a potential, jumping on an additional trade, because we already took off some profits up here, and we had gotten into the trade all the way down here, around the about $64, $65. We got in down here. We got some of the profits here. Now we're getting a nice pullback, and we'll see if we break higher, and that's the indication that momentum has shifted. Last but not least, this was also starting to show up. This was a QFIN is a trade that was showing up on the Investor Business Daily watch list, and as you can see, it broke out of what? Broke out above the moving averages and out of this downtrend line. So we're back in a move to move back up to the upside. where would I anticipate potentially getting into this a trade on this, and again, this is one of those that I'm going to be probably putting an order. I'm going to put an order in for our premium members later today, telling them exactly where I'm going to be getting in, and it's going to be about the $26 mark. Now I'm going to have to watch this one carefully because I'll probably only. This is not out the middle of that up there. And so if I took out the, I could actually drop below that level of support or below the 50-day moving average at about 6%. So that would be my stop loss on this one, and I'd be doing less than a full position. So that's QFIN, XBI, Boeing. Hey, there's 4 stocks for you to take a look at. And again, if you are, as I said, if you want to find out more, hey, just shoot me a DM. Or put a comment if you're watching this on YouTube to say, hey, Dennis, I'd really like to know more about how you plan your trades with active trend trading. We can start a conversation. And, I'd like to welcome you into the active trend trading family. So until later, I will say aloha. And there we go. Bring that handsome guy back. So until later, I will say aloha and God bless. And hey, keep trading the stock, keep it trading the chart in front of you. See ya. Aloha.